Before using Fibonacci to trade from, the first thing you have to do is understand what the tool is and what it is the tool is telling you. It's basically all in what the name implies of it. It's a retracement. And if you, on any given movement, it's going to tell you the amount price retraces upon the movement that you're measuring. Under normal conditions, you always draw the fib in the direction of price. Let me redo this here. And since price has gone down here, we're going to start here and go down with it. Where 100 is where we started from, and the 0 is the point where we want to measure the retracement from. One of the things that can be confusing about using the normal fib tool with the normal set of numbers on it is once you get to the point to where you have multiple fibs on here and you have them drawn in different directions, you can get confused by the numbers because you'll end up with a number that's higher than the previous one, then a lower one, then a higher one, then a lower one, and you're trying to guess which one is which. So to make things simple, me personally, I just relabeled these things. Let's get them out of the way here and get the real one. The way I use them is the very same way, but I'm always drawing them from high to low, and the levels are going to be exactly the same. I've just relabeled the fib tool so I don't have to draw it from high to low, then low to high. It's always from high to low, and you just keep walking your fib back and forth. I think you get the picture. A lot of times what you'll see me do is highlight this area, which is actually where most of the trade decisions are made. I'll explain a little bit here. As long as price moves above the long level, I consider it a long condition. If price were to break through the short level and come down, I would consider that a short condition. The highlighted rectangle is just to draw your attention to the area of what I consider to be the important part of the chart, because to me this is where most of my decisions are made as to enter a trade. There are a lot of other factors that I consider, but for general purpose and just to understand a little bit about how I use a fib tool, this will have to suffice for now. But to explain the levels a little bit more, the ideal condition is for once you draw your fib tool across the movement that you're measuring, you would like to see it come and test these levels, where that's going to tell you a lot. If price were to come up here and never break this long fib but fall out short and open a candle below here, that's a short entry. But as you can see here, price has come up and on this candle opened above the long level, indicating a long condition. Under normal conditions, though, me personally, I would not take a trade this late in the day, because I just simply don't like to hold them through the Asian session. I'd rather wait till out here into the London session gets going, and then I'd take this break, because this is your actual entry for the day to go long. And it's a pretty good indication, because pretty good signal too, because from the previous day you made more than a 61% retracement from the move that it made the previous day, which is a pretty good indication that it's about to reverse on you. And this would be your entry, because you can see price had been honoring the levels all the way up to this point. And once it broke free and opened a candle here, that's your long entry. I don't want to get too much into entry and exit rules at this point. First, it's just understanding the tool itself.